Hello everybody, welcome again to this last episode on stock valuation. Now we are looking at the average cost method, or simply called Avco. Average cost of stock valuation method. Now this is the last of the three main methods used in stock valuation, which include FIFO, LIFO, and average cost. We've done FIFO and LIFO in the previous videos. Now we have to look at average cost. Now we have a question on the board. Our question gives us the dates, the purchases, issues, and cost. Issues can be sales. Okay, so we have our dates here. On the 1st of March, we purchased 11 items at the cost of $10, and in the same date we sold 3 items, or we issued out 3 items. So this is it. All these rows and columns, they show the same information. Okay, they show the similar information. On the 3rd of March, we also purchased 20 items at the cost of $20. Then we issued out 20 items again. So we need to use this information to calculate the average cost, or we need to do stock valuation using the average cost method. Okay, so the first thing to know, the average stock valuation method, it uses the weighted cost to come up with a value of each stock item. So that weighted cost will be utilized. For example, if you are being told that you are only left with 10 items within the organization, you just have to take the weighted cost and multiply by the 10 items. So what it means is the average cost method, it actually somehow it doesn't take into account the fluctuations in the prices. The other thing that you need to know, the average cost method, it also ignores the negative movements in stocks. For example, we are saying that we purchased 11 items, then on another day we have a negative movement of stock. Maybe let's say on this day, on the 22nd of March, we purchased 20 items, then we also sold 30 items. It means there was a negative movement of 10 items, and that negative movement, when we are doing the Avco method, we don't change the price, we don't change the average cost price of our stocks because of a negative movement. That's the other thing. Those are the basics of average stock valuation that we are going to be doing. So now let's go into this. The average cost method is slightly different from the FIFO and LIFO methods that we have been doing, and the columns that we use, they are a little bit different, but we are going to make this thing a little bit easier for everyone to understand. Okay, so we're gonna need to add some columns here, columns which will help us to do our calculations. The first column that I will add is I'll just add a column written movement, M plus or minus. Okay, then I will also add a column written balance. I'll just put BAL for balance. This is the balance of stock. This is the movement in stock. Then I'll put another column written weighted cost, WC. Then I'll put last column written Avco. average cost. Okay, now you need to pay attention and see how we do this thing. Let's go to the first date, the 1st of March. We purchased 11 items at the cost of $10, but we also issued out 3 items. Okay, so what it means is the movement in stock. To get the movement in stock, we need to deduct what we obtained and what we issued out. It means 11 minus 3, then we come up with 8. So 8 is what was added to our stock. Then the balance, it tries to show how much stock we will be having. Now it's 8. We don't have the balance BD here, so we just put the 8 there. Then the weighted cost, in this case, is the cost multiplied by the balance, which will be 8 multiplied by 10, and it will give us $80. The average cost is the cost per each unit item. To get the average cost, we divide the weighted cost by the balance, and here we get $10. This is for the first line. Now we move to the second line. Here we bought 20 items and sold 20 items at the cost of 20. So here it means there was no movement, and the balance of our stocks remains at 8. The weighted cost remains at 80, and the average cost also remains at 10. Then we move to the fourth. We purchased 10 items at $23. It means there were no sales here, so it means 10 items were added into the stocks. Now our balance, it will be the movement plus this original balance. Now we have 18 items in the stock. Now for the weighted cost, it means we have to add the cost of these 10 additional items to the previous weighted cost that we have to get an accumulated weighted cost. Now it means 10 times 23, we get 230. That 230 we add it to 80 to obtain 310. Now to get the new average cost, we have to divide 310 by 18. 310 divided by 18 will give us 17.22. I'll just leave it to 2 decimal places. Then we move to the next scenario. On the 5th of March, we purchased 30 items, then we issued out 25 items. It means we remained with 5 additional. 5 plus 18, we come to a balance of 23 items. Then these additional 5 items, they were valued at $24. So we say $24 multiplied by 5 to get 120. Then that 120 we come and add it here. 120 plus 310, we come up with 430. Now 430 divided by 23, we come up with 18.69 or 18.7. Let me just put 18.7 is our new average cost. Then we go to the 18th. On the 18th, we purchased 15 items, then we did not make any sale. It means there was a movement of additional 15 items. Okay, so these 15 items, each item was bought at $26. So 15 multiplied by 26, we get 390. Then we add to this 430 that we have. Then we get 820. Then our stocks, we had 23. If we add 15 and 23, we come up with 38. Then we calculate our new average cost, which will be 829, this one, divided by 38. Then we come up with 21.82. Now we move to the 22nd of March. We purchased 20 items, then we sold 30 items. It means there was a negative movement of 10 items. Okay, so like we said, a negative movement of any items does not have an impact on the average cost on this one. It has an impact on the balances, but it doesn't have an impact on the average cost. Okay, so we come here and say 38 minus 10 will remain with 28. Then what was the cost of these 28 items that we reduced? We just take the average cost and multiply by 10. Then there was a negative movement of 218. So it means 829 minus 218. We remain with 610. 610. And the average cost will remain the same. It will remain 2182. So it means if we divide 610 divided by 28, we remain with 21.82. So this is what we were talking about, that a negative movement does not have an impact on the average cost. Okay, then we move to the next date. It was on the 25th. We sold 13 items when we received 12 items. It means there was also a negative movement, and the balance for items will be 27. 28 minus 1, which is 27. Also, that one item, we are going to deduct it from our weighted cost. So the average cost times one item, then we deduct the figure from here. So we are saying 21.82 times 1 and deduct that whatever we get from 610. Then we remain with 588. Then the average cost also has to remain the same. So it means that 588, if we divide it by 27, we still come up with 21.8. Okay, then this will be the accumulated or weighted cost will resemble our average cost, will resemble our total cost of stock. Then the average cost resembles the total cost per unit. So the average cost per unit, Avco per unit, will be 21.82, which is this one. Then the stock value, our stock will be 588. So in the first question they might ask you to calculate this average cost. Then the second question, then they will tell you there were maybe 10,000 or 500 units in stock, and they ask you what was the value of the stock. Now you have to take this average cost that you have calculated here and multiply by the number of units that you will be given. Okay, and with that you get the average cost. Now this is it for stock valuation. Let's meet again in the next lesson. Thank you so much.